We're speaking with Brett Knoblauch. He's CFA research analyst at Cantor Fitzgerald. They came out with a report on Adani Enterprises, and it's an interesting one. They've initiated coverage, and the rating is overweight with a 4,368 12-month target price. We're trying to understand the rationale behind the report and some of the points mentioned there. Very good morning, Brett. Great to speak with you here on NDTV Profit. Glad to have you here with us.
Thank you for having me.
All right, let's begin with how you've titled your report. India's path to self-reliance runs through Adani. And through that 47-page report, you have time and again sort of connected where India is right now and where the Adani Group is positioned in terms of its infrastructure play and India's policy initiative to be more self-reliant. Can you just give us an overview of why you initiated coverage and why you see this connection?
Yeah, I think we initiated coverage for a lot of reasons. First, just from Cantor's point of view, we think India is a big growth opportunity for us. This might just be one name, but I think it's a start of a much larger global push for our franchise, but especially in India. And with the Adani Group and its helping India on its path to self-reliance, I think if you just look at everything that they have built over the last several decades and have spun out and Demerged from gas, ports, Adani Wilmar and food, utility, energies, you name it, it's giving India, the infrastructure that they need so that they can be self-reliant and not so reliant on other countries, whether it be China or the US or other big trading partners. So when we look at what initiatives are currently going on in India that it's going to benefit Adani Group, we kind of first just looked at the segments that Adani is operating, then looked at the policies that are being implemented, like just on the roads, and look at how much roads that they're building. Just at Adani alone is looking to build over 6,000 kilometers of roads over the next several years. And with roads come more transportation. Same thing with airports, right? Adani is now the largest operator of airports in India, and the airline industry is relatively unpenetrated relative to more developed economies. So you increase air traffic. It all helps kind of drive economic growth. And if you look at just the portfolio of companies within Adani Enterprises, they're going to benefit from a larger India. And I don't think there's any other way to look at it besides that.
Yeah. Brett, can you hear me? Yeah.
Yes.
All right. So you also go on to say that in a sense, because it is a holding company, Adani Enterprises holds many of the businesses that the group is doing. Investors are getting at least 5 to 6 companies free, in a sense. Does that explain why your target price is at 4,368? Can you break that down for us?
Yeah. So I guess, as you know, Adani Enterprises is effectively a publicly traded incubator. It's part of the strategy is to build and then demerge businesses, which we believe makes sense to now value those businesses as a standalone entity. Now, Adani does a good job disclosing revenue, profitability, debt, and assets for each segment, which is helpful for us to, given the valuation framework that we use. Now, whether it's data centers, airports, road construction, renewable energy, or mining, there are many publicly traded businesses out there that we can use to help kind of determine the appropriate multiple. So we look at what those comps are doing from a growth or profitability standpoint, compare that to Adani's business. And in many instances, Adani's business is growing faster, just as profitable. So we just think it deserves a trade at a premium multiple to those comps that we came across. Now, we think our valuation is really driven by 3 segments. That's airports, roads, and ports. If we look at the airports business, right, there's a handful of publicly traded airport operators. The 2 fastest growing are airports of Thailand and Auckland International Airports. They trade on about 20 times 2025 EBITDA. You compare them to Adani's airport segment, we think Adani has the advantage there just because it's the largest airport operator in India, which is the most populous country. And if you look at airline penetration rates in their core market, 3 to 4% now, we think they can go to 15 to 20% over the next few decades. So you're going to get growth from that. And on top of that, you have Adani completing their Navi Mumbai airport, which gives them capacity of about 90 million passengers. That's 2 times as big as the largest airport in the US. So we value that on a 30x multiple, which we think is kind of easily justified. And then go to the roads business, right? There's 2 very close comps there in Atlas Arterian Transurban Group. They're trading about 24 times 25 EBITDA, which is fiscal year 26 for Adani. We forecast Adani's group to grow faster, and it's just as profitable. So again, we think a premium multiple applied to that segment makes sense at, I believe we're at 25 times for that. And then the last segment is renewable energy. And this one is a mixture of, I would say, relatively more established businesses and some, I don't want to say moonshots, but incubating businesses. So on the more established side, you have your solar manufacturing, your wind manufacturing, and then you'll have electrolyzer manufacturing. And those 3 will be, call it, fully operational within, call it, 24, 36 months. If we're looking at just those 3, we think they can do about $1 billion in EBITDA in 3 to 4 years. And given we have them growing revenue in that segment at upwards of a 65% CAGR over the next 3 years, we think that itself could also be trading at a 20 times multiple, right? So now you have 3 different segments that could be doing $1 billion in EBITDA in 3 years that could be trading on a multiple north of 20 times. That in itself gives you a $60 billion enterprise value right now, where the current enterprise value of Adani is just $40 billion. So you can see how you can get meaningful upside just from those 3 segments. And those 3 segments, when you compare to the total business in their most recent fiscal year, didn't even account for 20% of the total revenue or EBITDA. So that just means you're getting your very high margin mining services business, your coal mining, commercial mining blocks. They have 7 blocks in Australia, the Carmichael mine. And a handful of other, their digital business, their data center business, their Adani Wilmar stake's worth 170 rupees right now. Right. So yeah, we think just those 3 segments give you meaningful upside right now, which implies everything else is kind of free.
Brett, firstly, good evening. Thanks for staying up for us late evening in the US. Samina on the side. You believe that airports and energy is the big bet in the Adani enterprise. You've also maintained that in the last 7 years, what the incubator has done is hived off or demerged its businesses for value unlocking. In terms of timelines, when do you think, or what are you expecting or working with in terms of a demerger maybe? Is that the game you're playing? And if yes, what is the time horizon that we're working with, or you're working with rather?
Yeah, I don't think the company has gone out and kind of put anything on paper yet. But if we had to guess what the next business that would be to be demerged, we think it would be the airports business. There's 7 operational right now. The Navi Mumbai airport is going to be, their first phase is going to be completed and call it within a year. We think within 3 years' time that will be completed. It'll be at capacity. It's still going to be growing extremely fast. That's when they'll probably look to think about demerging that airport business. And at that time, it could be doing, as I said, close to, if not more than $1 billion of EBITDA, probably growing high teens-ish, if not more rates. So we think it would probably make sense to look to demerge that business around then. Outside of that, there's a lot of options. At that point, your data center business could be reaching much better scale. We have that by 2030, probably doing close to $600 million in US revenue. The renewable energy side, we think is probably a bit longer term, just because what they're doing there is really trying to build up a huge ecosystem, right? You have renewable energy from wind and solar. They're using that to power the electrolyzers, which they are also manufacturing. They're using that to then make green hydrogen, and then they're using that to convert it into ammonia and urea, building pipelines that connect into ports, and that is a 10-year play. So I don't think we're going to see them look to demerge that business until you probably at least get phase 1 of that green hydrogen plant completed, which is going to be fiscal year 27, but most likely not until probably several years after that. But I guess that was a long answer, but airports is, in our view, the best bet to be demerged first.
Is this the first Indian company you're covering currently? And is this the
Yes,
only Indian company that you're covering?
This is the only one and the first one, and we look to be launching on a lot more.
And what's led to that, Brett? Is it a request from your clients? I mean, what has made you sit up and notice not just India, but Adani as well? I do understand that we are being talked about with the kind of recent gains the markets have seen and policy continuity. There's so many things working in our favor. But what's made you pick Adani? Is it just a proxy play? Is there anything else that is coming in from your, from your clients that's encouraged you to take notice?
It's some client driven. It's some kind of on my own due diligence, and I'm lucky enough to have support from the higher ups, giving me the freedom to go out and launch on what I think is interesting. And we look for, call it, companies where we think there's very attractive risk reward that would appeal to our clients that are relatively undercovered. And when you look at Adani, I think it's safe to say it is extremely undercovered, especially given how big it is. So from being a first company to launch on in India, I think it makes a lot of sense, not just as one company, but it's actually a lot more than one company given all the different businesses operating within it. So we think it is kind of a perfect first company to launch on as we kind of enter the Indian market.
Yeah, and we look forward to more coverage out there too, Brett. But just one quick follow-up to that. In your note, you mentioned about how India's ambitions for becoming the third largest GDP go through becoming an infrastructure powerhouse. And therefore, in some sense, is this conglomerate, and by virtue of that, Adani Enterprises becomes the entity, the best way to play that infrastructure proxy story? And therefore, part two of my question is, would you believe that the story runs much longer than the 2, 3, 4 year target or 1 year target that you may have on Adani Enterprises currently, because infrastructure businesses are such long gestation businesses?
Yeah, I think that's a good way to put it, right? I think you could look at this over a 20-year view if you really wanted to. Right? Obviously, you can identify very notable near-term catalysts where you can kind of recognize or return value to shareholders through these demergers. But there's also a handful of other businesses that they have that won't pay off for maybe another 10 years if you're looking at the green hydrogen business. But that business itself could be doing almost $8 billion a year in EBITDA in 10 years. You put that on a 10x, 10 times multiple, you could see how that would be worth more than 2 times the current value. So what we like is you don't need all these different things to hit. You just need 1 or 2 of these to hit. So it comes with a good diversification from that. And if you look at just India as a whole, it's grown at a CAGR 2x that of the US over the last 20 years. They just came out expecting 7% growth this year. The biggest gap right now between, call it, India and China is the GDP per capita, where they're 5-6x less than. And I think the investments that the country is making right now is going to be very fruitful in closing that gap. And with that comes a lot more discretionary income for consumers. And Adani is getting more into consumer businesses. They're going to have more money to spend traveling, which benefits their airports. They're going to need more energy, which benefits their commodity trading, their mining, their renewable energy business. So it seems like everything that India is doing to become a much larger economy has some indirect benefit to where Adani's businesses are currently operating.
Yeah, or just that the promoters thought it the right way to go about and build the business around this India growth story. Just one quick follow-up, Brett. Did I hear you say that your current valuation that you ascribe to enterprises captures only 20% of the revenue or / EBITDA that comes in from the 3 businesses, and everything else is over and above that? So I'm just trying to understand, is that what you said? And if so, what's the optionality value that you are attaching to some of the others? If not formally, then informally.
Yeah, so our valuation is based on call it a calendar year 2025 or their fiscal year 2026. So if you look at last year to going from last year to then, the business is going to be a bit different, right? Their largest business last year was integrated resource management, which was over 70% of gross revenue. And that was just because it was a very high volume year and coal prices were very high, and it's very correlated to coal prices. Coal prices have come down a lot year over year. So you've seen that business come down from 70 to 50%, give or take of it. And we expect that's going to continue to decline as some of your newer, higher growth segments take more, I guess, mix of total gross revenue. So I guess my statement's a bit misleading given how high IRM was last year. And our 26 numbers call for, very high growth of these three segments. But the mix of those businesses, if we look out in 3-4 years, is still probably going to be less than, I would say maybe 40% of revenue. That's just because IRM is very big, but we value IRM and the mining business on 10 times EBITDA, which is in line with some other where the coal miners currently trade. So we don't use any, I think, crazy multiples for those segments. But our valuation is really driven by airports, roads, and the renewable energy.
Brett, one quick question, in fact, last question from me. You indicated that you've started coverage and, of course, Adani Enterprises proxy to the India growth story. Are you also studying the other Adani Group stocks at this stage, or have you studied those stocks and decided to pick an Adani Enterprise?
So we've only launched on Adani Enterprises. I think with that comes some, you kind of need to look at the other businesses, right, to know the full Adani story. You need to know that they've demerged 3 in 2015, 2 in 2018. Adani more recently spun out. So I think you need to be a bit more cognizant of the entire kind of portfolio of companies or Adani named companies. But we really just started with Adani Enterprises. We liked the publicly traded incubator approach that it is. So I would say we haven't looked extremely deeply into all of the other Adani named companies, but again, potentially something in the future.
Okay, so something in the future, perhaps. Just one last point, Brett, is you've spoken in detail about what you find exciting about Adani Enterprises and the group, but in your note, you also talk about risks and downside risks, as we do when we analyze companies. What do you think the key risks are? And if I come to your number one risk in your list, which is the political environment, the relationship with Government of India, as you've named it. Do you think that that risk is now minimized considering the expectations being projected for the next general election?
I do. Obviously, elections are always difficult to call, and you never really know what's going to happen. But I think you can draw some correlation to, I don't want to say the rise of India, but I'm sorry, the rise of Adani and Prime Minister Modi's ascension to power. But they've clearly benefited each other, and India has benefited as well. So it's more of an unknown than I would say a risk if there is a change in leadership. But I would say with the way things are looking at right now, that risk does look a bit minimized.
All right. Thank you for that, Brett. Fantastic conversation there. Cantor Fitzgerald has begun its India coverage and its Indian company coverage with Adani Enterprises. They seem very, very bullish on the company and see it in a sense as a proxy for the India story. So good conversation, Brett. Hope to have you back when your next report is out.